Welcome back here with us on Trading Hour. And the next stock on our radar is Sonata Software. The revenue grew over 20% sequentially. Margins, however, slipped a little bit. We are now joined by Samir Dhir, Chief Executive Officer at Sonata Software. Samir, thanks very much for joining in. You know, we were just having a chat and Rima was explaining to us in the break about how sort of attrition obviously has been a big issue for most companies, including you. So first things first, you told us in the last quarter that you couldn't fulfill some of the orders because of this manpower issue. Has that eased out in Q3? What is the attrition number, if you could tell us that as well, your outlook, and whether now you're back to business as usual, at least on the employee front, to fulfill and execute orders?
Sure. Hello, everybody. First of all, thanks for the opportunity. I think Sonata had a very strong quarter in the quarter ending 31st of December. Just specifically to your question, I think the situation as it pertains to manpower in general is easing off. Is it solved fully? Absolutely no. I think there's still a lot of work to be done for market to cool down further from an employee perspective, but our attrition has come down. Prior quarter, we had seen an attrition of about 21%, but in the most recent quarter, the attrition has come down to about 15%. So it's a substantial drop. We have to watch the trend as we move forward as well, so that this trend can be sustained over a period of time. Having said that, the demand environment still remains pretty robust for Sonata. I think we have more position than we're able to fulfill even now. In the last quarter, we probably told you that about 15% of our demand is still going unfulfilled. That number has come down to about 12% now. It's marginally better, but there's a lot of work still to be done to gain the market momentum that we're already seeing from a demand point of view.
Okay, so 12% of your demand could not be fulfilled due to supply side issues. Did you also face furloughs, which negatively impacted your revenues? And could you give us an indication of what Q4 will look like then?
Yeah, so I think the overall demand environment is pretty robust from a pipeline perspective, and the bookings that we've seen in the quarter, it is looking pretty robust. Our business is not impacted by furloughs. That doesn't impact us significantly. It's a small proportion, almost insignificant. As we look forward, I think the projections for the future coming quarter is also pretty robust. It will be pretty much in the line for what we have seen in the last two quarters. We'll end up delivering results around the same trajectory that we have seen in the past few quarters.
All right. Good morning, Mr. Dhir. This is Pavitra. You know, earlier you had told us that the wage hikes for FY23 will be in the later part of the year. So can you tell us how much of a hit on the margins you factored in because of the wage hikes? Because overall margins are down around 70 basis points, like we were just pointing out.
Yes, thanks, Pavitra. So the margins this quarter had a seasonality effect because we did some employee engagement activities and the travel has started happening post-COVID. So we believe there are some one-timers in our margin profile this quarter, which may not sustain, which may not be the expense going into the next quarter. So we'll have some recovery from that perspective. The second point is in the current quarter, in the January onwards quarter, we will have the wage hike impact coming through. And typically, we see about 2 to 3 quarters to recover that wage hike impact, which is pretty much will be the case this year as well.
So how much of a recovery? You said that, you are expecting some recovery on the margin front, perhaps because of some one-offs. It's at 6.9%. How much of a recovery could we see?
I won't be able to give you an exact number, but we'll probably see a reasonable amount of recovery. I think the quarter will see an impact of the wage hike, but about 20 to 30% will get recovered based on some of the one-timers we saw in the last quarter.
What's the wage hike impact in Q4 that you anticipate?
For the full year, we're expecting close to about 1.5 to 2% for the full year basis, the wage hike impact in the full course of the year.
Okay, got that. So that wage hike will wait. It'll have to be digested. Let's just talk about business momentum, Q4 and beyond. Some color, I mean, is it going to be largely driven more by the products business? Also, give us an outlook on the IT services side, because that's where there is some margin compression.
Yeah, so the IT services side, the demand environment is pretty robust. We're pretty excited about what we see in front of us. The order book and the pipeline is looking very robust, and we're seeing a pretty comprehensive growth pattern. Sonata's differentiated offering as far as modernization is concerned, I think customers are embracing more and more, and that's what is really fueling the growth. And I think we had almost like an industry-leading growth in the current quarter or the last quarter, and we probably continue to expect to see that trend go forward as well. Now, just to give you some color, I think across industries we service, the TMT vertical, which is telecom, media, and high tech. We've seen a pretty robust growth there. We've seen good growth in retail and manufacturing areas. We've seen a significant amount of growth in the BFSI area as well. So I think all the verticals that we have called out as our strategy will continue to see growth in those areas. So we are, I think, from a demand pattern perspective, by vertical, we're seeing a pretty significant momentum. Across geographies also, I think whether it's US geography and the UK geography, especially the westernized geographies, are seeing good momentum. And in Far East, Australia is a big market for us. We're seeing good momentum there as well. That's on the services side. And as far as the margin is concerned, like I said, we had some of the one-timers in this quarter, which will probably get largely remediated going into next quarter.
Mr. Dhir, we're out of time, but thank you very much for joining in. That's Sonata Software for you. With that, we're out of time completely on trading hour. The markets have recovered. We had gone down to levels of 17,850. From there, there's been a 50-point recovery on the Nifty. So currently, it's 17,900 on the Nifty, while the Sensex is down 700 points. But there has been a bit of a recovery from the lows. Thank you for watching this show from the entire team. Stay tuned. Halftime Report is up next.